So what's all this conversation about GameStop? Anyway, it's really been dominating the headlines over the course of the past couple of weeks, and you hear GameStop being talked about predominantly, but then you also heard this past week about silver being talked about, and also a company like BlackBerry, AMC, those types of companies. And so we wanted to spend some time in this segment really sort of explaining a little bit about what's going on, because what's happening there is a story old as time. It's a story of pride and greed. So let's begin. Welcome back to Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. My name is Joel Garris. I'm a certified financial planner, certified financial fiduciary with Nelson Financial Planning, where our team of certified financial fiduciary stands ready this week to help you change your life with a successful and cost-effective retirement plan that produces superior investment results along with peace of mind for the future. So the story of GameStop and its 400% rise in the prior week sort of starts with pride. This past week, so the prior week, GameStop up like 400%. This past week, it was in a more of a period of decline. Again, we're taping the show on Thursday, so who knows how the week actually really fully plays out. But the first 3 days of the week was generally on the decline for GameStop. And so the story really starts with pride. And pride is the way that these hedge fund guys sort of operate, right? When they brag and preen in front of the cameras on CNBC on a daily basis, that builds their personality. That is pride coming out at its purest human emotion. When you go on a major network and say, we're doing this, we're shorting GameStop because we think it's the blockbuster of the past, and the value of that company is going to go to zero, and we're just going to make tons and tons and tons of money. So you have folks like Andrew Left of Citron Capital, you have folks like Gabe Plotkin of Melvin Capital that love the attention, love the aura, love that comes with being a hedge fund manager. And in the case of Plotkin, he was even able to like leverage it into a friendship with Michael Jordan to become part owner in the Hornets and stuff like that. So anyway, that's pride. So all these guys, these hedge fund guys, started bragging up how they had shorted about GameStop. So let's stop right there and let's talk a little bit about what it means to short something, because particularly short a stock. And it's a means of basically positioning yourself in such a way that you think the price, or positioning your investments in such a way that if you believe the price of a particular stock is going to go down, then you buy an option to sell that stock at its current price. But because it's an option, then you don't actually own the stock itself. So if you have an option to sell the stock at its current price, your expectation is, well, okay, when I have to ultimately honor this contractual obligation in the form of this option, I'm going to be able to go in the market and buy it for less of a cost than what the option obligates me to do, right? So if I've got an option to sell the stock at a current price, let's say it's $20, and I think the price is going to go to 10, well, then I'm going to make a lot of money, because I can then honor the contractual obligation of that option, because after all, that's what an option is. I can then honor that contractual obligation by simply buying it at 10 and then reselling it at 20. I mean, I'm going to make 100% profit on that if that actually plays out. So that's sort of what the folks were doing, or the hedge fund guys were doing, when it comes to how they were shorting the stock. So they were using options to be able to do that. The problem is, if the price goes up, you are forced to buy that stock at whatever that price is when it comes time for that option to be fulfilled. So in essence, you can lose pretty big. Not only can you lose pretty big, way beyond what you actually invested. Because remember, when you buy an option, you spend just a few dollars to buy the right. You don't actually buy the stock. So when you buy the option, you spend a few dollars. So you can pour a whole lot of dollars into options, and if that goes the wrong way, then you've got to fulfill that using 10x or 20x the amount of money that you put into those options in order to make those contracts whole. So if the price jumps up pretty dramatically, what happens is a squeeze, right? And that's why it's called a short squeeze. Because so if you shorted the stock, you think you're going to be able to buy it later on for less, and the price goes up, then you get squeezed pretty rapidly, because to buy the options, you only had to spend a little bit of money. Now to buy the stock, you got to spend a whole lot more money. So there is our prideful antagonist, if you will. Enter now into the story our protagonist. We've got the prideful antagonist going on media bragging and telling exactly what we're going to do, and here we're going to make so much money, and here's how it's going to play out. And now comes our protagonist. And the neat thing about the story is the protagonist is just normal people like you and me that were like listening to this stuff and saying, wait a minute, something sounds kind of funny here, because if there's that much short activity on this particular company, if I get sort of a group of people to believe that it might go the other way, not only might we be able to push it the other way, but that having the stock price goes up may in fact wind up dramatically accelerating. So here's where they all sort of band together. They use social media platforms like Reddit, which is basically sort of an aggregator, a good place for chat rooms. Specifically, Wall Street Bets has sort of been the one that folks have been focusing on. And they figured out that if the hedge fund guys were bragging about their shorts, then enough of them, if they took sort of the opposite view, well, then they could probably drive things the other way pretty dramatically. So this is where we like to refresh people's memory. Look, every trade in Wall Street has two parties, and those two parties sort of believe exactly the opposite of each other. So our protagonist, if you will, in this story winds up being normal folks who successfully banded together and ultimately helped to drive the price of GameStop up. When the price started moving up, all of these hedge funds that had these options outstanding said, oh, wait a minute, we got to start buying these shares, otherwise we're going to lose our shirts. And so that produced a lot more buying pressure in the market, not much selling pressure. And so fundamental economics, if you've got a lot of buying pressure, the price goes up, and goes up pretty dramatically. So that's what happened. Here's the thing. That could really only happen like with a company of GameStop size. And by that I mean GameStop, for example, 70 million shares outstanding. If you contrast that with Microsoft has 7.5 billion shares outstanding. So it's a big difference in terms of size. So it has to be a smaller company in order for to sort of see this play out. 7.5 billion shares on Microsoft, you couldn't get enough people to sort of band together to be able to kind of drive the markets the way that it does. And then of course you need the ability to be able to communicate with a lot of people and get them all pushing in the right direction. And that is where the power of social media comes in. The other thing is, it's sort of tricky to sort of pin that as an illegal activity, because you really need sort of some real collusion on it. Just a bunch of folks working on social media that says, hey, let's buy this stock, let's buy this stock, buy this stock. That doesn't necessarily rise to the level of anything illegal that these folks have done. Now, obviously, the SEC is going to investigate that. We'll see whether there was somebody sort of behind the scenes, if you will, that was making things as dramatic as they were. But ultimately, remember, we said this story was a story of pride and greed. So to our happy protagonists, don't get greedy. If you've made a ton of money, congratulations, you won that round, go for it, that's great. Sell, don't get greedy. Pay off those student loans, pay off those credit cards, maybe even pay off the mortgage if you were really successful on it. But do not stick around to see how this goes, because just like the tulip bulb mania in the Netherlands in the 1500s, it does not end well. It is not sustainable. So be careful. Don't get greedy. Get out, enjoy the profit, and enjoy the story. A story old as time, pride and greed, if you will. With that, we'll take a break and return here on Dollars and Cents.